As Ava was saying, of course, storming higher in Asia after the Bank of Japan sent that strong dovish signal in the wake of Monday's stock rout. The Deputy Governor then saying the BOJ will not raise rates, quote, when financial and capital markets are unstable. Let's get more reaction then, bringing in our executive editor for Asian markets, Paul Dobson. Paul, how significant do you think these comments are? We're seeing sizable moves across these markets. Stepping into the fray then, the Deputy Governor.
Definitely. It's you could call it the BOJ put, if you like, a lot like we have the Fed put. Here comes the BOJ sort of stepping on the brakes, calming those expectations for more rate hikes in order or in response to the turmoil that we've seen in the market over the past few days. And, you know, to quote Alvin Tan from RBC, it's not just the BOJ, but it's the whole government that seems to be worried about the turmoil that we've seen in recent days. We also heard from the Prime Minister Kishida yesterday talking about the same thing, trying to calm people down. And all week long we've been hearing that kind of rhetoric. But I think it's more significant that the BOJ, having just a few days ago sounded so hawkish, is now scaling back those expectations for how quickly it's going to hike. I mean, look, this is massively important for Japan, right? They've had all of that mega long period of deflation or very low inflation. Finally, you know, they've managed to kindle some price growth. Finally, inflation was looking good for them, and they want to get interest rates off the floor. They want to normalize monetary policy. They don't want it all to go wrong the moment that they lift interest rates, which is what's happened in the past as well. So they need to really, really carefully sort of prepare markets and prepare the country for that process in order that they don't stir up this kind of volatility and they don't upset the apple cart. What they did, you know, I think it was unfortunate because the timing of the Fed and then the US data came right at the wrong time for them, pretty much coincidentally, and sent the dollar stronger as well. And that's something that, by the way, is going to continue. That sent the dollar weaker and sent the yen stronger. And that's something that's going to continue and be weighing on them or troubling them. So they just really need to set those expectations carefully. So the comments, I think, to come back to your question, pretty significant and just reveal that kind of concern, that worry, that nurture for the market response to the BOJ's policy calibration in order to ensure that it can continue to raise interest rates without unsettling financial markets too much.
So, Paul, is this the end of the crisis, if we call it a crisis, mini-crisis in Japan? And what happens to the unwind of the carry trade?
Yeah, I think it would be optimistic to call an end to it just yet, and that's because of what I was saying there, Tom, about the US side of the equation, because the market is now worried about a US hard landing rather than soft landing. It's starting to think about the Federal Reserve needing to cut interest rates aggressively, which, all things being equal, should weaken the dollar and push up the yen or support the yen, and therefore, you know, tamper with or complicate at least that carry trade. And so therefore we're likely to see continuing volatility. The second thing I think to worry about or consider is the fact that a higher volatility regime, which we've entered into these past few days, will cause investors to take money off the table. They won't be pouring straight back into all of these more risky strategies right away. They won't be allowed to because of the risk metrics and parameters that they have around their funds. And so therefore, you know, we will be more cautious going forwards from here for sure. I don't think that you can expect everybody to immediately put this behind you and get on with buying the dip again.